Good afternoon, traders. This is Brad Matheny. Today is the 26th of April, and what a crazy day we had in the markets. Let's take a look here at the S&P E-mini futures contracts. First off, on the weekly chart, we're still bullish. So longer term, we don't have any indication of downward trending yet. The markets, believe it or not, could still find support across this level here in the S&P, which has not been, let me try that again, which has not been broken yet, and we need to basically watch and wait right now to see if that level holds up. It has gone bearish over here on the daily chart. So you can see here we've got these arrows indicating bearish trending. So we're in a moderate daily downward bearish trend. This is a very strong indication that trend may be reversing. I need you to be aware that your smartest move right now is what I've been telling you for weeks upon weeks upon weeks, is to pull capital away from this upward trend in the market and to prepare for extreme volatility. Now the NQ is bullish weekly still, and still trying to hold near these levels. You can see here that we got just below these levels on a closing price basis just as of yesterday. We need to break below this level. If it breaks down below this level, we're going to be looking at moderate pullback. Now, we've seen moderate pullbacks. This was COVID in the past. It could be that we get a little bit below it and then rally back above it. Remember, support and resistance are soft levels. So you need to be aware that we could get below it. It could freak everybody out. Everybody could start selling out of their shares, which is likely what happened today. And it could rally back up, try to find support, especially if the Fed comes out and weakens their expected rate hikes or attempts to adjust their plans. You can see here on the daily chart, we've been bearish on the Nasdaq since April 8th on the daily, which means that this is telling us again that the markets have rolled over on an intermediate term basis, shorter term basis, and we have been bearish the Nasdaq for quite some time. Haven't gotten into extended trending yet, downward, but we're still bearish nonetheless. Let me tighten this up so you can get a better picture of the last couple of years. You can see we got bearish over here, rotated around and went back into bullish right here, shortly, and then rolled the bearish right here. We could see quite a bit of sideways activity here setting up, so be prepared. The Dow Jones Industrial is down 809 points, and it has flipped bearish today on the daily chart. Is still bullish on the weekly chart. Let me get rid of some of these lines and keep the rest. So now we still have that same support level that we're watching. I'm going to draw it across these recent lows here. And I need you to be aware that this is really where we're looking to try to see the markets hold support, maybe attempt to move a bit higher. The interim daily charts moving into bearish trending is concerning. It's the first red flag of a potential major trend change, but it's nothing yet as if we get these trend changes on the longer term weekly charts. The transportation index is bullish weekly, bearish daily, rolled over. You can see we still have these very strong support levels. They actually carry way back to over here across this level, and this would be the line in the sand, the price level that we need to see broken if we're going to get any type of continued downward activity. So today freaked out a lot of people, and you need to be aware that we do not have any longer term downward trending indication on my rotational modeling system. The daily charts have moved into bearish trending, which is the first red flag. This means we pare back 50-60% of our position, maybe even more, and prepare for some very strong potential volatility and trending. But we don't have any confirmation on the weekly charts, which is what I want to highlight to you today. Now, even the SPY here has gone into pinkish trending, which we had back over here. And this is still bullish. As long as we're getting these yellow dashed lines, this is still bullish. You can see the daily has gone into red downward trending today. We had red downward trending about a month ago, back in early March. And you can see we found support down near these levels. And again, we take a look at these levels here. This would put us right in across these lows. And these are the lows we're looking to see if they hold going forward. Okay, lastly, we're going to look at gold and silver. We'll start with silver. The rotational modeling system on silver is still bullish weekly, bearish daily. We've had a very strong pullback. You can see a line I drew for subscribers that potentially indicated where silver may go. This support level down here around 21 and a half, 22 and a quarter is still very, very important. It's more than a year old. It's historical support. And to be honest with you, ladies and gentlemen, we have interim support in the midpoint of this area here, which is going to act as another level of support for silver. It's going to be a very interesting move in metals because the dollar has gotten to 102 today, and we're seeing dollar strength. The dollar continues to strengthen, and silver and gold hold up like they've been doing. For the past couple months, dollar's been going pretty much straight up, and gold and silver have been holding up quite well. That's why I think this interim support level right around 22 or 2340, 2350 in silver is going to be a really nice support. If it gets down into this area, this is probably a very solid buy trigger right now if it gets down into the 2130, 2140 area. You can see the daily charts rotated. We've been in this rotation. You can see green and red daily. It's because it's been chopping sideways. We have no real trend. So the rotational modeling system has been flipping to bearish when we get into bearish momentum, flipping to bullish. We get into bullish momentum and back into bearish when we get bearish momentum. The longer term weekly is still telling us bullish. We have a bullish trend taking place, and I expect silver to be up above $30, $31 before June or July, likely, if the dollar rotates and starts to move lower. Gold was fairly strong today compared to what was happening. It's up $3. You can see, let me get rid of these lines. You can see we've got a very solid bullish support system taking place across gold here. The rotational modeling system has been bullish the entire time. It's been basically telling us that we need to look at opportunity in these dips. I've got my support channel here, which extends all the way out. Just carry it out to that. We are bullish from January 19th in gold right now. We've got no real signs of weakness going on, no color changes, no change in momentum trending. Gold is holding up very well considering what's going on with the dollar, and I think we're going to see gold and silver recover fairly quickly over the next 5 to 10 days once this washout occurs. This washout is primarily driven by fear of what the Fed is going to do, supply side constraints going on in China and throughout the world, debt and credit related issues with the raising rates by the U.S. Fed, and general market malaise. People have been too complacent in this uptrend, not knowing what's likely going to happen. Let me go back to the SPY. Not knowing what's likely to happen with the Fed and with inflation. We've seen this huge, huge rally phase after COVID, and now we're getting into this reactionary trend back to the downside. Bitcoin moved lower. The Nasdaq moved substantially lower today. The S&P moved substantially lower. The Dow Jones moved lower quite a bit. The transportation index was down almost 500 points today. This is, in my opinion, reactionary. We'll see how these things hold up. We'll see what the Fed does. My advice to you, if you haven't already pulled away from some of these excessive high peaks, is look to trim your portfolio and get ready. We're not in a bearish trend yet. We have none of our long-term systems here have gone into bearish trending. Just the daily charts, which I would consider intermediate and short-term, have gone into bearish trending. That means that we need to start to prepare. And if you haven't already, pull some assets away from risk that's taking place in the markets and prepare by moving into a cash position and or into some sort of a hedged position. Buying gold and silver, physical, is a great way to hedge. Buying some longer term options, potentially. Sell 60% hypothetically of your portfolio and take 6 or 7% of that and move it into very long-term options in miners or metals. So for example, GDXJ, longer term is bullish, shorter term is bearish. Now GDXJ are the junior miners. You can see we just had a buy trigger over here last week. We've gone back to red, hasn't flipped to bearish yet. It's still bullish with the yellow lines. And silver miners are probably bearish because they've been trapped in this downward move. Yep, they are bearish long-term, bearish short-term. I believe this is going to be a very good opportunity back down here near these lows. In fact, it's already into this low level for silver miners. So silver miners, again, have reached this low level down in the 12 area. It looks like it's a very good opportunity to start loading up on some call options here, expecting to see some upward movement back up into this $15 to $17 range. All right, guys, that's your update. Markets are very, very weak. They're strenuous. They're seeking a bottom. They're looking for support. Overnight in Asia and Europe, we could see quite a bit of selling, or we could see a nice little rebound depending on what happens if this is really an oversold knee-jerk reaction. So pay attention. Now's when you need to really follow my research. Talk to you later.